Lloyd Blankfein, of course, everybody has an opinion right now about where SPACs fit in terms of the overall market narrative. Certainly, Lloyd Blankfein earlier on Squawk weighed in on that. Here's what he said.
If a few of these go bad or they were overpaid and some people made a lot of money and investors lost money, people are going to say, where, you achieve the economic equivalence of an IPO, but where was the process and diligence that we all associated with a rigorous IPO diligence process? And that kind of drops out. Now, I'm not saying that they're all bad or that any of the ones that you could bring up are bad. Some of these won't work. And my advice to people who are doing this now would be really, really diligent, really, really document. But, again, in hindsight, if something goes bad down the road, people will look back and, show trials to follow.
Wow.
Jim Adams-Singolda of Taboola this morning on Squawk made the argument, look, we're all trying to be well-behaved public companies on the other side. Why should you look negatively upon us as we go through this crucible in a different way?
Well, look, I think that people are genuinely excited. A lot of what's going on are younger investors. I hate to keep coming back to them, but they're very excited about what these companies are doing. And the way they express their excitement is to buy stock. They don't just sit there and say, boy, this is interesting. David, they place bets on the stock.
They do. And you can see these moves. Many of them are having. Not the Handler, not the Landcadia one. That's Tillman Fertitta, Rich Handler doing that deal this morning. But everything else is moving up significantly. Foley, of course, remember they did their last deal is at 19.
Right.
I think BFT, is that the symbol on that? They haven't closed it yet, but they announced it, of course.
But this is about having so much money. There's so much money.
There is, and by the way, the investment banks are benefiting. I mean, it's funny listening to Blankfein, but Goldman, listen, they're underwriting the SPACs. They're also getting merger credit as well when the deals are done, because remember, they are a merger, even though really it is a way, of course, to go public. It's also credited as a merger. So Wall Street is very happy with this, and it will continue to for some time. And of course, to his point, there are going to be those that are not good, and there are going to be plenty that succeed as well. There's no doubt. And we're just pointing out some of the moves here ahead of time. And, they're already valuing many of these companies far above where they were valued on their last round when they were private, having raised money. And yet they're then getting a boost in the stock market to the tune of 30, 70% in some of these names, which is pretty extraordinary at this point.
Yeah.
But not unlike what we've been seeing to a certain extent, Jim, in some of the IPOs that we've been seeing.
Well, yes. I mean, there's just, if you look at Snowflake, if you look at DoorDash, some layoffs
Airbnb.
Airbnb, very, very successful, never really came in. I want to go back, if you don't mind, to Bed Bath & Beyond. So Loop's note today says they do a periodic pricing. Price gap is narrowing. It doesn't matter, David. It's 67% short. It just gives these people another reason to break the shorts. And that's what this is about. There's this, not the SPACs, but the big short positions, the shorts better cover because the longs are coming for you.
Yeah. That's getting more evident every day, Jim.
Shepard Smith here. Thanks for watching CNBC on YouTube.